Okay, my fellow zombies, we're all freaking zombies, aren't we? People, we have to talk, you and me. So much going on, and I mean really big stuff here. Um, let, let's start off. I don't even know. Let's start off with the market, all right, just so I can get my head on straight. So earlier today, the Dow Jones Industrial Average was up almost 500 points. We finished higher, yeah, about 75 points. Okay, that's all well and good. Fractional gain for the S&P 500. The Nasdaq actually was the best performer today, but that wasn't the real story. It's not the real story. I know everyone wants to look at the Dow and spray their shorts all over it. It's the debt market. The US 10-year yield cratered, cratered. It's at 3.38. What does this tell us, people? Yeah, it's a clown show. Exactly. What this tells us is there is an enormous amount of effort right now going into buying debt, trying to foster the illusion of stability. Imagine my shock. Imagine your shock. Thank you, the spiritual capitalist. I like that name. That's pretty good. Interesting. Very good. Anyway, so again, if you follow this blog, what have I been saying? I've been explaining that if they can foster the illusion of stability in the market would go higher. But there's a bigger issue now brewing. The bigger issue comes down to this propping up of a dead system. The banks, you've heard the term zombie before, zombie banks, insolvent institutions, not profitable institutions, institutions that have that are deep in the red. Thank you, Matt Ellsworth. With regard to liabilities, I mean, with trillions of dollars, multiple trillions of dollars. Thank you, Matrix Game Master. So, understanding that it just came to light that the Federal Reserve has now pumped, here's the number, another $153 billion into the banking system. This is not going to stop. Okay. No, and I'm going to be honest with you. Trillions upon trillions upon trillions could be pumped into this system. It's not going to be enough. All right. Right now, there's an enormous effort, as I said earlier, to prop up the debt market here, to keep rates suppressed. Thank you, Gene. Wow, I'm so bad with names. Gene Baps. Gene, how you doing? Thank you. Anyway, so keeping our eye on the debt market here, understanding that what's going on is unprecedented. Now we got something else that's very interesting. Despite the fact that the Federal Reserve has pumped another 153 billion that we're allowed to know about into the banking system. Now we got Moody's, the rating service. This is their warning. Okay, a warning from Moody's that banking turmoil risk. There's a risk that this turmoil cannot be, are you ready for the word? Contained. We've heard that word before. Now, Moody's here is 100% correct, okay? They can't be made to look like the fools they were last time, where they were rating bonds triple A that they knew were worthless. You understand? So this warning here from Moody's about the banking issues here, they may not be able to be contained. I'm going to say duh here. Now, this was followed up. When this came out with this whole thing with Moody's saying that these banking issues may not be contained, the stock market dropped into the negative, pretty deeply into the negative. Then Janet Yellen followed up with this, that the United States, that means you and me, because this is a country of the people, by the people, for the people, right? How about no? But okay. That the US would take additional action if necessary to stabilize the banking system. So it's unlimited, like we heard a few days ago here. Central banks have already committed to unlimited cash to prop up a dead system, a zombie system. Now, she went on to say, the U.S. Treasury, this is interesting. Listen to the wording here. This is what she said. Yellen, stain, it, thing, another vomitous mass. U.S. Treasury would be willing, under the right circumstances, whatever these may be, um, take additional action to protect depositors, okay, cash that's in these institutions, and also make available withdrawals if it came down to that. Now, this is what's exactly going on here. It started with the so-called rescue, of First Republic, the 30 billion. I guess the powers that be didn't foresee the bank run, the size of the bank run on that bank. Again, that 30 billion got wiped out almost within a few days. And then they were talking about a second rescue here. Jamie Dimon got involved. Yellen. Okay, this additional. I want you to understand what we're looking at here. This additional $153 billion that the Fed just pumped into the banking system. This is to cover withdrawals. Okay, there are runs on banks right now as we are speaking, but you're not allowed to know this stuff here. Anyway, but according to Yellen, they can do a lot more, and it's just so interesting with Moody's here. Moody's really should have worded this a little bit different here. That the risk of the banking turmoil cannot be contained. It can't be contained. All they're going to do is wallpaper over it, literally with dollars created magically out of a thin air. But it's not going to fix the problem. They can't fix the problem. We found out. I forgot what day it was, just a few days ago here, that these institutions have at least, and this is, multiply this by 10 and maybe you're in the ballpark here, $2.2 trillion of unrealized losses on the books. There's no way, and this is at face value. Again, when they throw a number at you like 2.2 trillion, like the US debt or the deficit or whatever it might be, you have to understand that there are layers and layers and layers and layers and layers and layers of derivative bets under that, side bets on both sides, to the upside and to the downside. It's literally in the astronomical range. Okay, but that's what's going on here. Anyway, going back to the market real quick, although we had these crazy gyrations again, Dow was up almost 500, I think 481. We finished up 75. Bitcoin over 28,000. Gold and silver getting bid up really, really nicely. Crude oil falling under pressure, demand concerns, because our global economy is doing so strong that they're afraid demand is falling off of a cliff here. It's not going to last, in my view, okay? Commodities are priced in dollars. Commodities are priced in dollars. Let's do this together. Commodities are priced in dollars, okay? The dollar is going away in its current form. It's becoming extinct, like the dodo bird. I've used that analogy a lot of times here. Thank you, Lava Girl. I want to thank you, Lava Girl, for asking people to like these videos. Again, I don't understand. We got 1,671 people watching this. I only got 332 thumbs up. Can we do something about that? It's a click, people, please. If this is interesting to you, if what I'm covering is important, a thumbs up is always welcome. It makes me feel good too. Anyway, it keeps me sane. Anyway. So let us move forward here. So this is interesting. I love how they spin these things. So apparently, new home sales did better than expected, but what you're not allowed to know is year over year, new home sales are down 19%. That's pretty much a crash, okay? And medium home prices are down 8.18%. You're not allowed to know this stuff, people. They must hide it from you. Thank you, Matt. I appreciate that. Putrid vomitous. I love it. Yeah, it absolutely is. All these things here. But again, the real story today, what people really honestly should be paying attention to, Crypto Shah. Thank you. Thanks for being you too. All right. You're awesome, all of you. The real story was the debt market. I mean, we're watching an incredible phenomenon take place. Could you only imagine? I mean, just think for a moment here how the debt market is humongous compared to the stock market. It makes the stock market look like a grain of sand on a beach. Okay, the debt market, the amount of cash that would need to be pumped into the debt market to create a move lower like this in the 10-year yield that we've been seeing today, especially, is just enormous. Who has that kind of firepower? Obviously, it's central banks here. And they're not done. And according to Janet Yellen, they're going to do a lot more. So this 153 billion that just got pumped into the banking system only to cover withdrawals. Again, what are people doing? They're pulling their cash out of the smaller institutions and they're funneling it right over to people like Jamie Dimon, okay? The Wall Street super banks, because people believe that their money is safer there. Maybe to a certain degree it is, because they got a main line right to the Fed. But who's going to pay the price here? Again, hundreds of billions of dollars being pumped into the system, trillions of dollars. It's going to be in the trillions. Okay. What nobody's talking about, at least on the mainstream, and we've been talking about it a lot, is the ripple effect around the entire world. This is a shock wave. Again, an inflation shock wave is coming at us. It's coming right at you, and it's coming right at me, and we can't stop it. Okay, central banks, they're raising rates, hasn't done a damn thing. Inflation continues to rise. It appears that central banks are starting to back off now, okay? They're backing off a little bit here. Fed 25 basis points, Bank of England 25 basis points. Maybe we'll get another one, the next FOMC meeting, and maybe a pause, whatever. It's not going to stop. Inflation is going to go higher and higher and higher and much higher moving forward, much higher moving forward. I think we're all clear on that. The purchasing power of central bank issued currencies is literally being sucked out by design. You all know this. For how many years have I explained collectively central banks are in a race to see who can suck the purchasing power out of their currency faster? That's what they're doing. Henceforth, why you're seeing inflation. I mean, it's in your face. Are we making this stuff here up? Are we like, I don't know, looking into a crystal ball saying maybe this is going to happen, maybe that is going to happen? No, it is happening. Jack the Ripper, $10. Thank you. Please watch today's episode. Okay. Look, nothing would surprise me, and I'm telling you right now. I'm ready for whatever they want to throw at us, and I think that we all should be ready for whatever they want to throw at us because we haven't seen anything yet. And I want to give a little shout out here to Moody's for at least trying to tell the truth. Moody's, the rating agency, saying the situation with the banks may not be able to be contained. All right, that word contained. When I hear that word contained, I get images of the other freak from my bygone age. We're talking about Ben Bernanke with his, it's contained. It's contained. The whole financial crisis is contained. It wasn't contained. It swept the entire world. Meanwhile, this guy continues to get accolades, and this guy, like, he walks on water. To you and me, he's worthless. He's not even worth my spit. That's really the truth, and I think that all of us would probably agree that is actually the case here. Someone's into a word I can't say here because I'll probably get SEMEN. Okay, lovely. We'll have one thing. Anyway, people, my lovely friends. What do you guys and girls want to know about here? What do you guys want to talk about? What other questions do you have here? SS, thank you, SS. Celebrate. All right, we're all going to celebrate. Is oil good? Yes. Crude oil, in my opinion, commodities, in my opinion, are a great place to be moving forward. Okay, these are real things. And as this imaginary world just evaporates around us, and I think that's exactly what is happening here, we're going to see real things, real lovely things here all over my freaking desk. Definitely move higher. But the real move, let me again say this here. The real move in commodities is not, and cryptocurrencies, the real tremendous move in commodities and crypto is going to come when we have a meltdown in the debt market. Thank you, Tony. And that's going to happen here. It's almost like, they're building up energy by central banks here, putting a lot of effort to stabilize it. No, wrong word. To give the illusion here of stability in the debt market. They're hoping that this is going to allow cash to move into the stock market here. Again, if that illusion is maintained, generally stocks go higher here. I mean, just to put a perspective on that, what have central banks been doing since the last meltdown? Suppressing rates, suppressing rates, suppressing rates, suppressing rates. That has created an environment of risk, meaning cash makes its way into risky assets, stocks, for example. Okay. But an interesting phenomenon here. Like I said, 3.38 last time I looked at the 10-year yield, and the market barely did anything today. We were off to the races earlier, but I think the market is starting to understand that things are a lot worse than they actually appear. Um, so long commodities, yes, people. Unless you're new here, absolutely. I in my free newsletter, and I hope all of you here are subscribed to it. There is a link in the description of this video. I put out no less than 2, maybe 3 publications there that go over a whole bunch of exchange traded funds that give you exposure to commodities here, crude oil. Uh, look, that's my take on it. But I want all of you don't listen to a damn thing that I say. Please do your own research into these things. Does it make sense to you that eventually we're going to get a meltdown here in the debt market, which is the ticking time bomb in my view? And that meltdown is going to cause rates to spike in an uncontrolled fashion. That's going to melt down global stock markets. Thank you, Justin. Yeah. Don't bet against America. You call this America, Donald Trump? Really? I see Donald Trump is here with us now. Thank you, Donald. I'm glad you're here. There's no resemblance of this nation whatsoever. Even when you were president, Donald Trump, calling for the Fed to keep rates low, go negative, and for a weaker dollar, sir. Don't forget that we all heard you say that. That really wouldn't be the way to go. That would empower, of course, the Federal Reserve and other central banks. This is not the United States of America. This has become a corporate cesspool on an epic scale. That's what we have here. This mechanism where central banks, none more so than the Fed, is raising rates and raising rates, is to make credit not available or harder to obtain from U.S. small businesses. Meanwhile, these mega institutions, who are all part of the military-industrial complex, big pharma, getting massive subsidies from we the people, big energy getting massive subsidies from we the people. How does that work? When the poor guy out here on the street trying to, or girl out here trying to, get by in this environment, competing with this corporate agenda, they're getting destroyed. This is America, really? How about no? Okay, in any way, shape, or form. Wow. Patrick, thank you. Incredible. And yeah, Slavelandia. I mean, that's what this is, people. Look, we're going back into a two-tier society, period. All right. I've been warning about this for a decade. The extreme haves, extreme have-nots, the middle class is getting systematically erased. This process has been going on for quite a long time. It's just accelerating now. It's more in our face than ever before. You understand? Serfs and lords. Oh, exactly. It's unbelievable. And they want to keep people locked in their homes, forced to do things that they don't want to do, and creating dependency. I mean, I've never seen anything like it before, where we have slavelandias, people becoming slaves to the current system in staggering numbers. And it's only going to get worse, in my view. And I think most of you here would agree with me on this one here. It's awful. It's really awful to see. But we got each other, right? We got each other's backs, and that to me is the most important thing. In the end, that's what we're gonna have. All right. And this thing here, just be ready. As I've been telling you for I don't know how many freaking years, have the high ground. Okay. And no matter what you do in life, always have the high ground. Okay. It's not always gonna work, but at least it'll give you the best chances of getting through whatever comes at you. Try to think ahead down the line a little bit. And sometimes, no matter what you do, things are going to go the wrong way, and that's just life in the big city. But anyway, that's it. Why is palladium crashing? I personally think palladium is a nice place to be as well. Platinum, palladium, silver, my favorite of all. That I will not change. And I always ask you to do a little homework on here. It's just so simple. Look at the Dow gold ratio, gold silver ratio, people. This is why I tell you that silver is the spot to be in my view. But again, please do your own research on these things. All right, people, look, I am long on cocoa. Vintage guitars. Yeah. Hey, you want to see something cool? I'll show you real quick. I picked this thing up. Ugh. What do you think? Pretty nice, huh? Pretty sweet. Anyway, that's it, people. This guy here loves all of you from the heart. I mean that. Thank you. Look at this. I got 2,250 people watching this, and I got 1,014 thumbs up. That is awesome. And if you feel like you want to give me a thumbs up, I'd greatly appreciate it. All right. Anyway, I am kind of like really out of here, people. This has gone really, really long. And you know what happens when these videos go too long? People complain. And I like to keep, well, for those people that don't know, the complaint desk is closed. Okay. So I don't really care, but whatever. All right. People, that's it. I'll see you in the morning, and it's going to be just beautiful as usual.